One of my favorite things to do to evaluate a publicly traded company is to go through the transcripts of conference calls that the management team of the company holds with Wall Street investors. This is what I'm going to do in this video here with Microsoft and its latest quarterly conference call with Wall Street analysts. Now, if you want to follow along, this is on Microsoft's Investor Relations website, and you can go to the latest quarterly updated conference call transcript and see this document there for yourself. I'm going to go through and highlight the big picture items and evaluate and elaborate on what's going on with Microsoft stock according to the company's management. So let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's start with an update on Copilot PCs, or in other words, personal computers that are enhanced with artificial intelligence. Microsoft saying that it's allowing them to win new customers. So they said they introduced new AI experiences only available on Copilot PCs, like the action Click to Do, which places an interactive overlay over your desktop to suggest next best actions. Now, this is interesting because as someone who works on the computer, for many, many hours every week, 6 days a week, 6.5 days a week, sometimes more than 10 hours a day, it would really be helpful to have some of these AI assisted actions on my computer as I'm working. If it learns from my actions, the things I do when I open one window, what I usually open next, those types of things, if it can learn from that and suggest these actions and make these things a little bit easier, a little bit quicker for me, that would be extremely helpful. Now, I'm not on one of these new Copilot PCs, but I plan to test one soon to evaluate how it can help my workflow and how it can help my work. So this is something, again, that's been the trend of artificial intelligence, which is that it enhances productivity, it increases productivity, it makes people more effective with their time. And this is yet another step forward. Again, we're still very early days in how artificial intelligence is going to help and the types of services that are going to be developed from artificial intelligence. Another action that's going to support increasing sales of computers is the end of support for Windows 10, which is going to happen a year from now. So Microsoft saying that they're well positioned to transition their customers to Windows 11. So some of those older computers that are on Windows 10, they will no longer receive support from Microsoft. And so that's going to encourage some of those folks to replace those computers and upgrade to the latest generation technology, or they might choose to just update and buy a new copy, an updated copy of Windows instead of buying a new computer. But some people will choose to buy a new computer, others will choose to update the software. So AI is also transforming how people search, transforming browsers and digital advertising, and Microsoft saying they continue to take share across Bing and Edge. So this is something that Alphabet stock investors were very concerned with coming into 2024. It was clear that Alphabet was behind the race in artificial intelligence. ChatGPT was well ahead of Alphabet on AI, and investors were concerned that Alphabet would lose a big share of its search engine business because it was so dominant. It had over 80% market share in search engine business worldwide. And so there was only one direction it could go from there, which was down. And that was what investors were very concerned with Alphabet. It's true, Alphabet has been losing market share in that segment throughout this year. But even still, it hasn't put a big dent in Alphabet's business overall. And one of the other reasons why Alphabet could be going along with this trend and not fighting back too aggressively is because its large market share in that market is drawing too much attention from regulators. They're getting concerned and they're not liking all that attention they're getting from regulators. So they might be saying, all right, let's just go along with this. Let's let ourselves lose some market share because it would be costly to fight back anyways. And we don't know if we want to have more dominance in an area where we're already getting attention from regulators. So maybe we just let Microsoft take a little bit more market share. Maybe we let Yahoo and others just take a little more market share in search and not fight back too much. So it's probably both happening simultaneously. Partly Microsoft is benefiting from the enhanced effectiveness of its own search engines with AI. And then the other part of it is Alphabet just kind of letting it happen because of the regulatory scrutiny it's under. Microsoft also gave us an update on the acquisition of Activision Blizzard, and they're saying that they're focused on building a business positioned for long-term growth, driven by higher margin content and services. And the gaming industry, this is an opportune time, I believe, for the gaming industry. Microsoft coming in right as the gaming industry is switching to more digital, becoming more services instead of hard copies of games, which was, prior to 2015, a lot more games were being sold through hard copies and a lot more games were one-off purchases, right? You buy a game for $50, that's your game, that's your copy, that's what you pay, and that's it. Nowadays, the gaming industry is switching more towards the incremental model, the monthly active subscription model, where you pay $9.99 per month to get access to this game. Or maybe the game is free, but you have to buy in-game services, etc. So the current format of the gaming industry is a lot more lucrative, a lot more profitable, a lot more sticky. And I can understand why Microsoft was interested in making this acquisition to bolt on to its existing gaming business with the Xbox and its existing platform there. So it's good to see that's the direction they're going. They're going to drive this more towards the digital side, more towards the subscription side, more towards the download and cloud-based gameplay rather than selling individual copies of games, which is going to be a lot more profitable for the industry overall. So good to see that here from Microsoft. Interesting developments here with Microsoft, right? Their AI, they're gaining market share in search. Their latest acquisition of Activision Blizzard is going to be huge for its gaming side of the business. And then they've got the upcoming end of service for the previous generation Windows, which is going to drive incremental revenue for the company. Either for Microsoft, they're going to benefit either way, whether consumers buy a new license for the Windows 11 or if consumers buy another computer, which comes with another copy of Windows, most likely, and they benefit because the manufacturer, the OEM, will pay Microsoft for access to that license for Windows. So lots of benefits coming here for Microsoft. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.